Hi, my name's Nigel and I'm one of the accountancy team at HBS. This is one of a series of videos that we're running to try and help people who are either thinking about starting a business or may have just started out in business. And today what I'd like to talk about is forming a limited company. Now, limited companies are a little bit more of a complicated beast than sole traders. So it's important that you research it very thoroughly before you start a company. So what do you do to start a company? Well, you need a shareholder and you need a director. So you can pop onto Companies House and start a company. If the name's already been taken, unfortunately you can't take it, but sometimes there are ways to have a similar-ish kind of name, but not exactly the same. So you can play around with the search fields to be able to do it. Once a company's formed, you will get a corporation tax reference, and you need to hang on to that for your accountant because they will need it to file company tax returns. And also you will then have some statutory duties, and as directors you will have the duty to prepare accounts, and Companies House will give you the timescale for that, or it'll be online when you've formed a company. You need to keep proper accounting records, which we've done a little video on accounting records as to how you could possibly do that. You'll also have to submit corporation tax returns, and most importantly is make sure that you open a company bank account, and if you've issued one share, you put £1 in the bank account for the share capitalisation, or if you've done 100, make sure the shareholders each put in something adding up to that. Once that's done, then you're good to go. Everything that you send out has got to have the limited company's name and number on it, because they need to know who they're dealing with. And as directors of limited companies, even though you are no longer self-employed, if you swapped over or if you started from scratch, you will need to complete a personal tax return. Because if you're taking a mix of salary and dividends, then the dividends are taxable, sometimes at 7.5%, sometimes more than that. So you will need to pay income tax. And the way to do that is to complete a tax return. So as soon as you start taking money out of the company as a director, you need to let HMRC know and register for self-assessment. So I hope this has been useful to give you some hints and tips to get you started. If you've got any queries, then as always, drop Joe a message or pop a message underneath this video and we'll get back to you. Thanks for listening, and good luck with your business.